Okay, I want to talk about this next. Paying off a whole life policy versus what's called vanishing premiums within an IUL. This really frustrates me. I saw this on a podcast, an interview the other day, where this IUL agent was saying that you can pay off an IUL. It is just egregious. That is a straight up lie. Just because you don't see premiums being paid or the premiums stop on an IUL illustration, that does not mean you never owe another premium payment ever again. Guys, what did I say in the beginning? An IUL is built on annual renewable term. There's premium due every single year. That doesn't go away. All right. You cannot pay off an IUL like you can a whole life insurance policy. So when you see like on an illustration with a whole life policy, the premiums are gone. That's because you've literally paid off the policy. You will never owe another premium payment ever again, and your policy will still continue to grow. It's kind of like paying off the mortgage on your house. When you pay off the mortgage, you still own the house, right? It can still go up in value, right? It's literally the same thing with dividend paying whole life insurance, right? You can pay that off. You want to pay into it for 10 years, 20 years, to your 65, to your 70. It's totally up to you. So there actually is a lot more flexibility with a whole life policy than a lot of people will say. We'll get to that later. All right. But that's actually like, I love that feature of whole life, that you can pay it off. That again, it goes back to that peace of mind that I have this asset that I've paid off. It's going to continue to grow and be there for me when I need it for the rest of my life. Like I love that. With IUL, it's the exact opposite. Do not be fooled by these illustrations when they show no more premiums being paid in, that it's paid off. It is not. It's called vanishing premiums. That's the specific term that I've seen for it. Okay. Just understand. All right. Again, it's not necessarily a deal breaker, but like run away from an agent that tells you, oh, look, you never have to make a premium payment ever again. Okay. Well, that's making a lot of assumptions, because that cost of insurance is due for the rest of your life, guys, and it's going to grow exponentially. So you better make sure you're managing that net amount of risk so that you don't have to make another premium payment. But if your policy does not perform and you're not paying attention to it and it wasn't set up correctly, that's a big part of this as well, is designing the IUL. If you didn't fund it properly and you get older and you don't have enough cash value to cover the cost of insurance in the policy anymore, you will get a bill from the company saying, hey, either pay us this amount to keep your policy in force, or the policy is going to lapse and you lose everything and potentially a massive tax problem as well if you've been taking income from it. Okay. So, and that will happen every single year after that. All right. Where you now have to make massive premium payments into the policy to keep it in force. To make sure you don't end up in that situation, either avoid IUL completely. Okay. Or make sure you're working with the right person and you understand how this works and how it needs to be managed, because that can be a very dangerous situation.
What's up, my fellow wealth creator? Thank you so much for checking out this clip from the Millennial Wealth Creator podcast. If you'd like to watch the full podcast, there will be a link down below in the description. Make sure to also check out the additional tools, training, resources that I have in the description as well, just to help you along your journey. Thanks again for checking out the clip, and we'll see you in the next one.